Loading. Okay, go ahead.
The election is officially not over. We still don't know who the president of the United States is, and we're all wondering, when are we going to get the final call? Right now, we're mostly waiting on Nevada, Pennsylvania, Georgia, and North Carolina. Of course, who knows? By the time I say these words, one of these states may have called it. Which, by the way, I'm wearing the glasses. These are blue light glasses. They're not to make me look smart or anything like that, but they do help me when it comes to my eyes. Thank you, Hosanna. So, appreciate that. By the way, drink a lot of fluids. Yesterday, I thought I was going to get sick. I was deadly worried. I felt something last night. I was on my couch and I started feeling this. You know how it goes. It's not shivery, but you just know something's wrong with your body. So I took 3 pills of these. I think they're called Wellness Formula. I think you guys know what this is. But yeah, that actually helped me give you some really good boost. So with that being said, let's go and talk about the election results and what's happening, how that's affecting business, real estate, the stock market. And yesterday, one of you guys asked me a question, very interesting question. Why is the stock market not crashing? Because it looks like Biden is on top of, I mean, he's pretty darn close to that 270 electoral vote number. And a lot of questions have been coming in. Why isn't the stock market crashing? Why is the stock market not reacting or responding erratically to the point where, we should be seeing negative? In fact, I just checked this morning, all Dow Jones, S&P 500, they seem to be doing okay. I mean, it's not superb. We're not seeing double-digit returns or anything like that, but we are seeing rather steady green pattern. We're seeing positive numbers. So let's get to that in just one sec. But before we get into why the stock market is not crashing, it's actually doing okay. The reason we'll get to that in one sec, but I want to make sure to highlight, of course, our free book. And I know you guys are getting sick and tired of this, but I really want you guys to get access to the information and the knowledge that you guys need to be prepared for the next upcoming market crash. And you don't want to be obviously not prepared to take upon opportunities that may be coming in our way. So this book is absolutely free. This book is going to show you how to buy rental properties without using your own money or credit. My brother, when we were 20 and 22 years old, we were able to acquire 75 units without using our own money or credit. No BS. I'm not just saying that for as a marketing pitch. We really did go from 0 to 75 units in one year. If it was a lie, we wouldn't be able to publish it. We would probably get trouble by the Federal Trade Commission and for obviously mispractice in business. But grab this book. It's free. The link is down below, 0 to 75units.com. Again, that's 0 to 75units.com. Grab your free copy today. All you have to do is pay for shipping. So why do I think the stock market is not crashing? And I got to give this credit to Kevin Paffrath, me, Kevin, as you guys know. And I was watching him yesterday, and something ticked on me, and something quite didn't dawn on me till when I listened to Kevin. And that is the Senate majority still goes to Republican. I mean, it's not finally confirmed, but it looks like the Republicans will remain control in the Senate. Now, this is good because obviously there's still going to be a quote unquote gridlock, as Kevin pointed out, which means that even though the House of Representatives and the president may both be Democratic, and that's assuming that Joe Biden wins, the Senate is going to give him a hard time. Right? The House introduces a bill, goes over to the Senate. The Senate may shut it down because obviously a lot of the Republican policies kind of come in conflict with the Democratic policies. And of course, if Joe Biden were to become a president, he may sign off on a lot of these bills that the House may pass, but the Senate may give him a hard time. So there could be where obviously if the Republican Senate says, you know what, we don't like all the bills that you're sending us, we're going to shut them down every time they come, or we're going to vote and we're going to say no to every single one of these bills that come onto our side. So the stock market sees this as, you know what, the Senate is still Republican, House looks like it's going to go to the Democrats, and if Joe Biden does win, there's still going to be a gridlock. The House of Representatives and even President, if Joe Biden wins, then there's still going to be a conflict to where if Joe Biden and House of Representatives does want to pass a policy that might be anti-business or anti-market, the Senate is still going to be there to kind of block and keep them in check. And I think that's ultimately what's beautiful about our country is that we do have checks and balances. No one party has the ultimate power to be able to pass bills that are highly unfavorable to one side or the other. And also keep in mind that we also have the Supreme Court, where the job of the Supreme Court obviously is to enforce the law through the eyes of the Constitution, and of course to enforce what is law. But we can expect to see if Senate, also Republican, though the Supreme Court isn't supposed to be partisan, but we know that majority of the Supreme Court judges, right, justices are conservative. They lean conservative. So there is checks and balances. Even if Joe Biden does win the presidency today or tomorrow or whenever the final electoral vote has been counted or been called, there is still checks and balances. So I say this because, the previous days in our show, we've been talking about how Joe Biden has some really anti-business, anti-corporation laws that could upset the stock market in many ways and upset a lot of the real estate transactions that we want to do. But of course, the Senate, being that it's Republican majority, it seems that way, that there could be checks and balances that will prevent House and executive, supposed Joe Biden, if he or the administration would pass any particular bills that would hurt businesses as well as real estate investors. So that being said, that's the explanation. And again, credit goes to me, Kevin, for that thought and the video that he released yesterday. And I didn't quite think of it that way. It was a really good perspective from him. But my perspective is, even if Joe Biden does win presidency, even if he does win the White House, luckily there is a stoppage, and that is the Senate. If you're concerned about some of the policies that he is thinking about introducing that are really bad for the real estate investing business and the real estate business in general. Am I like 100% anti Joe Biden? No. Again, I don't typically take sides. I look from an angle of what would benefit the American entrepreneurship, what would benefit the American free market, and you guys clearly know just by what I'm saying. I'm a huge believer in the free market. I'm a huge believer in entrepreneurship. I truly believe that the entrepreneurship is a way of creating solution. And I say this even to the point where I think entrepreneurship is the answer to the environmental health. I believe it's the answer to even medical, breakthroughs. Because if you think about it, in a free market setting, the person with the best idea and the best solution ultimately wins, right? We're driven with this competition. We're driven by, yes, profit, but we're driven by the idea that we want to create value and solution in the market to where obviously the majority benefit. Think of it this way, right? Apple, Steve Jobs created the iPhone, although I don't own an iPhone, right? I'm a team Samsung. But think about iPhone, right? Think about the unbelievable value that the iPhone has created in the marketplace thanks to Steve Jobs. Right, he was driven by profit. He was driven by, and I would also argue that Steve Jobs probably cared less about money. He was more so driven by his passion to do something that's going to be earth-shattering, right? As he said, right, putting a dent in the world or the universe. But without guys like Steve Jobs, who probably believed in the concept of the free market, that we probably wouldn't have iPhones or the concept of a smartphone, right? You guys all remember back in the day, we had Motorola flip phones, Nokia flip phones, but I digress. Anyways, let's have a conversation about how do you guys think about the elections going so far? I know there's talks of, potential fraud in Michigan in terms of election, how they're counting ballots. There's not a surefire confirmed proof, although there's plenty of videos circulating around social media to make you believe that there's some kind of fraud. But I want to hear your guys' thoughts. How do you think the election is going so far? Is it a disgrace? Is it happening the way it should be? Tell me down below. I'd love to hear and have a conversation and chat with you guys. And yes, I do have some really cool real estate training for you guys at the end. Towards the end of the show, so stick around, don't miss the training. We were supposed to have Daniel in today, but he is running a fairly important meeting with our real estate investing team. We're looking at markets, so I am tasked with looking at different I am tasked with doing the show again. So there we go. Unknown Anonymous is saying fraudulent election. I enjoy your comments. Yes, I do see some heated comments there by Unknown Anonymous. So yeah, I mean, I clearly we have one person that isn't liking the way that the election is going. But I think no matter who becomes the president, what we do have to remember is that we ultimately have the responsibility of living the life that we ultimately have the choice, right? We ultimately have the responsibility of living the life or creating the quality of life that we want. So no matter who becomes the president, right? I think we're all going to live. Okay, we're going to survive. We're going to be okay. Do I think we're going to go full blown communism? No, I don't think so. I mean, if it really is heading that way, I will tell you. I don't think America will go full blown communism. Maybe not for another 50 years, but who knows? But I think at the end of the day, we're going to be okay. Even if Joe Biden wins, even if Donald Trump wins, I know some of you guys don't like Donald Trump. Some of you guys don't like Joe Biden. But either scenario, I'm not entirely too worried. I really am not. I still see the checks and balances in the government system. So I'm not entirely worried about it. Okay. Ann is saying, I'm killing myself on whether I should buy a house in the next 6 months. I firmly believe the housing market will crash. So yeah, I truly agree with that, Anna. And I say this with a bit of a confidence, mainly because we have an awesome research team here in the Kwak Brothers. But when the market does crash, and here are the two scenarios, right? One can make an argument by saying, well, maybe if it doesn't crash, then the prices will keep on going up and it will escalate, and you would have missed out on a chance of some really good appreciation. The argument, which is the argument that I stand for, is that there will be a market crash in the next 6 to 12 months, and therefore you should kind of put a pause on buying anything. I think when looking at any sort of investing situation, and Daniel likes to say this a lot, you got to protect your downside, right? The moment you can eliminate your downside, the moment you can eliminate any sort of downside risk, then you have everything to win. So if you are going to gamble, if you are going to invest knowing that there is going to be a downside, that's, obviously that's pretty close to gambling, right? I don't like to gamble when it comes to making investing decision. I only make bets knowing that the downside has been covered. Meaning, if I know that I can't possibly lose, my odds of losing is, let's say, 10 to 1, then that's a pretty good odd that I would have all the upsides to take advantage of. So what I mean by that is, in 6 to 12 months, if the market does bottom out, or if it comes crashing down, even if it does crash in 6 to 12 months, I don't think it's truly going to bottom out till maybe 1 or 2 years later. We probably won't see the true bottom point till 2022. I think people are going to feel it in terms of the intensity in 2022. We're going to see the headlines go down in 2021, and it's going to be more of a domino effect. But I don't think we're going to see. I don't think we're going to see the bottom of it until 2022, even maybe 2023. So even if it does crash next year in 6 to 12 months, I'm still going to kind of observe and see where things are going. I will study and if any new information does get introduced, then of course I will respond to that. But I don't typically make knee-jerk reaction when it comes to investing decisions. Careful studying, planning, right? I think Abraham Lincoln said it the best. If I have 6 hours or 10 hours to cut down a tree, I would spend the first hour or two sharpening my axe, right? I believe in that philosophy, right? Don't just go running off, start whacking at the tree, right? Focus on, how am I preparing right now? Is my tool sharp? And obviously, I'm alluding to, are you prepared to make those types of investing decisions, knowing that you have the knowledge and information to do so? So again, I don't believe that as soon as we hear the market crash is coming, 6 to 12 months, I don't think I would be the first one to jump in and buy. I think I would still kind of see and wait. And I say waiting, not from the perspective of just waiting, but waiting with information in hand, knowledge, and correctly studying where the market is heading out to. So I think it's better to stay in a holding pattern right now, not buying anything. I think the market's too hot right now. If you have any real estate that you want to sell, now is the time to sell. Sorry, I banged over there, but now is the time. I was checking if you were paying attention. You know how your teachers do it, right? Back in high school. But I think now is the time to sell. If you have anything to sell right now. And I said this yesterday, now is the time to downsize. Now is the time to pay off your debt. Now is the time to eliminate expenses as much as possible, because you don't want to get caught when the market comes down. You don't want to get caught being over leveraged, right? You don't want to be necessarily caught with your quote unquote pants down, right? When the tide goes out. So now is the time to focus on that. When the market isn't doing hot, when there's blood in the street, right? This comes from more of a contrarian philosophy of investing. Is when the market is doing terrible. Now is the time to obviously, then is the time to go and invest. Or I think now is a good time to start putting a position on shorting, if you like, on real estate. Or we don't really like to talk about stocks mainly because we don't focus on it. But I think now is also a good time to short. So. Annan is saying, how do you explain this market surge when the election is still debated? I love AMD, but it already rocketed. I was waiting until after the election. Yeah, so something I pointed out, and I said this earlier in our show, and I'm sorry if I'm repeating myself, but just to kind of reinforce what I said earlier, I think the reason why the stock market isn't crashing, or it's not behaving erratically the way that we anticipated, because right now, if you guys are paying attention to the election result, Joe Biden is pretty darn close. I mean, he's got 264 electoral votes secured. If he wins Nevada, it's game over. He doesn't even have to win Pennsylvania. He doesn't even have to win Georgia, North Carolina. Even if Trump does win North Carolina, Georgia, and Pennsylvania, all Joe Biden has to do is secure Nevada, and the game's over. Joe Biden is declared the president. But I think the reason why the stock market isn't crashing or isn't doing anything crazy right now is because the Republicans still hold the Senate. The Republicans still hold, and will continue to hold for a very long time, the Supreme Court. So I say that the stock market is not going down right now. It's not reacting to the fact that Joe Biden could possibly win. And that's because the Senate will cause a stoppage, right? If, let's say, the House and Joe Biden teaming up together, they want to pass a new tax law, or maybe they want to repeal the Tax and Jobs Act, right? Jobs and Tax Act. Sorry, I keep rearranging those words. But even if Joe Biden and the House Democrats do plan on repealing a lot of the tax cuts that we've seen in 2017, the Senate is there to obviously say, you know what, we're not going to vote for this. We're going to say no to this. We're going to shoot it down. And unfortunately, that's it for that bill. So if, let's say, for example, Joe Biden wins, the House reintroduces the HEROES Act, Joe Biden and House Majority Leader Nancy Pelosi comes out and says, hey, Senate, you got to pass the HEROES Act. If we don't, then we will do some nasty things to you, right? Even if both president and the House pushes for the HEROES Act or any other bills that might be contrary to or anti-free market, the Senate is still there to say, nope, we're not going to pass this. We're not going to do anything about it. Even if such laws do get passed, obviously anyone can challenge and take things to suit. And of course, if it escalates and appeals to the Supreme Court, then Supreme Court, obviously being that majority of the justices are conservative, we can expect to see, a lot of the ruling be on the favor of conservative side. Although my argument, and also looking at it from an originalist point of view, the Supreme Court is supposed to be nonpartisan, right? It's supposed to purely interpret law based on what the Constitution says and what the law is. But obviously, we've seen in more of the modern times, the Supreme Court has been siding more so based on partisan viewpoints. So with that being said, I think that's one of the reasons why the stock market isn't going erratic or isn't going down or isn't experiencing any kind of drop. Right now, I can look this up for you guys and just say stock market isn't going down. It's actually doing okay right now. I'm looking at CNBC. Dow Jones is doing pretty good. We have a 426 point increase right now as of right now. S&P again 60 points. Nasdaq 257 points. So a lot of the market's not. Surprisingly, not reacting too badly. It's doing pretty decent. So I think that's one of the reasons why the stock market isn't coming down or isn't all red across the board. I think that's one of the reasons why. So there you have it. In terms of why I don't think the stock market is going down. Annan follow-up says, so either way, the market goes up. Good for Trump, good for Biden. But if Trump contests and it goes to court, it might fall. I don't know about that, because obviously, if Trump wins, we're pretty much going to have a repeat of what we had the last 4 years in terms of the patterns that we've seen. Because last 4 years, we had Senate majority Republicans, we had the House obviously belonged to the Democrats, and we had the executive power under Trump. So I don't think, even if Trump does win, I don't think it's going to fall necessarily, because the market knows what to expect. We've seen Trump's economy the last 4 years. We know what to expect. In fact, there could be arguments made that if Trump does win, and somehow he wins Nevada, he wins Pennsylvania, North Carolina, and Georgia, then we may just see a continued increase in the economy. In fact, we may see even more investor confidence. But that's just my argument. Okay. All right. So with that being said, guys, that's what's happening in the election. Kind of reminds me of the year of 2000 when George Bush and Al Gore went at it. It took weeks for us to get any kind of results. So yeah, this is a reminiscence of what we've seen in year of 2000, when George Bush versus Al Gore. Everyone thought that Florida was going to go to Al Gore, but of course we know today that George Bush won Florida. So that's why I think this is so reminiscent to 2000. CNN called Florida to be Al Gore, then they called it back, and then ultimately became George Bush. So again, it could be wrong, right? Annan says, contest the outcome. If it goes to court, it might drag out till December. Yeah, it certainly will. I think either it was Wisconsin or Michigan. The state doesn't officially call the election result till December 1st, I believe. So none of it is official technically till December. And so we have to watch and pay attention to what goes on. So with that being said, let's transition over to a little bit of real estate training that I have for you guys. And this is a little bit of a continuation from what I talked about yesterday, is if the market does crash in 6 to 12 months and you've timed it right. And of course, every real estate market is local. Who knows, in 6 to 12 months, your market, the market that you're looking at, might be ready for you to purchase, or might just have hit that bottom. We may see a wave of different markets hitting bottom at different times. So, like Dennis Repetition is here in our show, Milwaukee might experience the bottom maybe in 12 months. Denver may experience the bottom in 6 months. Some market may not even experience a market crash, period. And we saw that in 2008. State of Ohio got hit the least in terms of the prices swinging down or up. So back in 2008 through 2012, majority of the markets in Ohio didn't really experience a crash or bottoming out. In fact, it had a little bit of, a dent, but it really didn't experience anywhere near the intensity and extreme price changes like LA, New York, California, some of these major metropolitan areas. A lot of these coast states and coast cities, they tend to experience a larger swing when it comes to some of the economic sensitivities. So in 6 to 12 months, let's say the market crashed. Yesterday, we talked about how more seller financing opportunities will come, more subject to opportunities will come. I think we're going to see a kind of a final confirmation for a lot of these baby boomer landlords wanting to retire in the next 6 to 12 months. We're still seeing kind of the tail end of baby boomers that are landlords. They're probably going to retire in the next 5 to 10 years, probably 5 years. And more landlords that are retiring are going to look and seek ways to get out in the next 6 to 12 months, especially with if there's another market scare, there's another market crash. These folks can't take that. They rather have more of a secured, safe, more consistent type of returns with their investment. They don't want to have to deal with management. They don't have to, they don't want to deal with tenants. And especially they've seen the effects of COVID-19 on landlords and tenants, right? They don't want to have to deal with that all over again. So in 6 to 12 months, when we do experience some kind of major market crash, again, depending on where you are in terms of your local market, I think this is going to be kind of the final nail to the coffin, so to speak, to a lot of these baby boomer landlords that are going to say, you know what, I'm done. I'm done. I'm retiring. I'm selling. I'm getting out of here. So that presents a very good opportunity where you, as perhaps a beginner investor, or maybe you're trying to add more to your portfolio, this is a great opportunity where you can come in and swoop in and say, hey, baby boomer landlord, I am interested in buying your property. And this could always segue to a conversation of owner financing or seller financing conversation. So here's what that may look like. And here's how, at a practical level, how you can catch those landlords looking to retire. If you ever see signs that says for rent signs, and especially signs that are handwritten, right? You see those red signs that says for rent or for lease, and then phone numbers are often written using Sharpie and hand drawn pens or whatever. If I were you, I would collect those phone numbers, call them up, and ask if they would be interested in selling, especially in 6 to 12 months when obviously the motivation level is going to be high. More landlords are going to want to sell, especially the landlords that bought incorrectly last 5 years. So call them up and say, hey, I'm a real estate investor just like in your area. I do see that your sign says for rent, but I just wanted to ask, are you perhaps interested in selling your property? Are you interested in perhaps letting this go? And then that would obviously segue into a conversation of perhaps doing owner financing, seller financing, especially since a lot of these baby boomer landlords that may have held on to their property for a fairly long time, if they do choose to sell, they may have a rather high tax bill as far as capital gains and depreciation recapture. So seller financing, of course, if you guys been following, and of course, if you guys bought our book, and you will know that doing seller financing does have some tax savings or ways of postponing and delaying taxes using seller financing. And that's a huge benefit for the seller, because a lot of times they don't want to pay large sum of taxes come next tax year. They don't want to deal with that. So luckily, seller financing does provide a way where the seller can experience a little bit of tax deference and some tax benefits there. And of course, if you are paying interest as part of that seller financing agreement, then the seller will collect anywhere between 3 to 6% interest on that seller financing note. Very safe for the seller, which you as the new buyer, you are responsible for the maintenance, the upkeep of the property. You have to deal with any code violation if there are any, and also you are ultimately responsible for pretty much the well-being of the property. So it's really great for the seller because all they have to do is collect checks every month, no matter what happens, right? If the tenant doesn't pay, too bad. You still have to pay the seller. So the seller gets a 3 to 6% interest earning on their equity, and they get to defer the taxes. Very safe way of the seller exiting without experiencing any kind of significant loss on the tax side. So I think that's a great opportunity that may present itself in the next 6 to 12 months when the final kind of the tail end baby boomer landlords are ready to retire. They experienced COVID-19 and how devastating impact it had when it comes to the landlords and tenant relationship. I think a lot of the landlords are wanting to exit. And I've been saying this for quite a bit. If you are buying, buy correctly, buy with some rational training, knowing that you are buying with the numbers supporting your hypothesis, right? If you think a deal is great, why? Right? What are the numbers that justify as to why the deal is great? Don't just say the deal is great because it's got a really pretty nice staircase and it's got, you love the paint color, the porch looks nice, right? Those are not non-indicator as far as how the property will perform. You gotta be able to justify and analyze every single up and down of the property. That is, of course, your rent. What are your maintenance expenses looks like? What are some of the capital improvements you got to do in the future? What are, of course, the taxes, the property taxes, insurance? Are there HOA fees or any other utilities that you don't know about? Don't let those numbers creep up on you. You do need to know your numbers and be airtight when it comes to analysis. If you don't, and I often like to say, uneducated buyer today is the motivated seller tomorrow. Meaning, if you don't buy without any proper education, then you're going to turn into one of those motivated sellers that we often talk about, and you're going to have to sell, obviously, in a very unfavorable way for you. So don't be that person where you're uneducated, you don't look at the numbers, you don't analyze them well, you don't structure the deal properly, where obviously your downside has been mitigated and you're reaping the benefit of the upside. So with that being said, let me take some questions and let's have a conversation. I don't necessarily want the show to be just me talking and just babbling on, right? This is in North Korea, right? Let's have some response and let's have some conversation, right? Annan says, yeah, that's a good thing to keep in mind. I keep forgetting real estate is a local thing unless interest rates suck nationally. Yeah, I think that's one big thing, obviously, in terms of fiscal policy and monetary policy, is that, interest rates do have somewhat of an impact. However, I've seen markets where none of that really matters. Markets where they don't tend to appreciate very well because it's a very small town. There's no employment that is really driving any sort of organic demand. And that's also another thing I want to talk about is there's a difference between organic and phantom appreciation. Organic appreciation is done when the market does have an increase of employment. There's more jobs coming the way. Let's, for example, say Tesla or some big major company says they're going to move into a very small town here in Illinois. You can bet and imagine that small town in Illinois, where it's got like 5,000 people population, will experience a major boom in terms of employment, demand for housing. You can imagine property taxes going up to curb that demand. So that's an organic growth where there is an actual economic impact as far as the new employment, new businesses opening up, new jobs growing, and you got increase of demand for educated workers to move in. Yeah, that's definitely going to make all the properties around that area appreciate, and you're going to be rich. You see a lot of this in Asian countries like South Korea, Japan, and China, where a lot of that is it happens like this. It just happens really, really quick. I think the United States, we live in a big piece of land, so it takes a little bit more time for any markets to kind of change rapidly. But that's an organic growth, right? When employment comes in, other factors that actually can add strength to the economy, that's an organic growth. What would be a phantom growth or phantom appreciation is the interest rate. Any sort of interest rate or policy that impacts appreciation is a phantom growth. Or if there is an artificial way of growing demand, that's a phantom growth. And what I mean by that is, let's say you make the credit score requirement of getting a loan super low. Let's say FHA or Freddie Mac comes out and says, hey, the new lending criteria now is if you have a 500 credit score, you qualify for a loan, 0 down. Guess what? Every stinking person is going to want to buy a home. Every stinking person is going to go out there and say, oh my gosh, I got qualified for a mortgage, right? This is exactly what we saw back in 2005 through 2008 when subprime mortgages were prevalent. And combination of that, you got obviously shark loans and predatory lending practices, very bad things. But if you were to see that again, where, people with 500 credit score, 0 down, right? You don't even have to have a job to qualify for a mortgage. And when then all of a sudden there's more demand for housing because there are more buyers in the pool, then that would be a phantom appreciation, because that could easily be taken away like that, right? The policies can change overnight. And, FHA may come back in and say, well, just kidding. You have to have a 680 credit score to be able to qualify now. Well, that sure eliminates a lot of people from the buying pool. Therefore, there's less buyers. And now you got, of course, this critical crash that is going to come down because it's all been propped up by, policy and just artificial stimulation, right? There's really no job growth. There's no increase of velocity of money or currency being exchanged. There's no real substantial market growth. Then obviously those are not what I like to call organic appreciation. So in places where there's not much of organic appreciation going, there's not much of a phantom appreciation going, those types of markets seem to stay stagnant. They don't really change in terms of pricing. They're not really sensitive to market price. Even if you, let's say, for example, were to build a brand new spanking house for $100,000, right? And in a certain market where all the houses are being sold for $30,000, $50,000, 40,000. Yes, and those markets exist, right? I've invested in those markets before. Even if you were to spend $100,000 in building a brand new spanking house in those neighborhoods, you're still going to have a $40,000 house, right? Even if it costs you $100,000 to build that house directly in the middle of those types of market, the moment you call it finished, the house is worth $40,000. This is why you don't really see a whole lot of growth. You don't really see new supply or new inventory in terms of those markets because, I mean, why, right? Why build a new home when immediately when you're done, it's worth, half of what you spent on it. So that's an issue with what a lot of these, stagnant markets without any kind of substantial organic, stimulus in terms of these market. Okay. All right, let's go ahead and have some, we'll leave some time for Q&A and then we'll go wrap up the show. Tomorrow, we will not have a live show because we are doing a free 3-day training on real estate investing. Don't want to miss it. We have some amazing speakers like Ty Lopez, Jerome Maldonado, Brandon Elliott. We have so many experts coming in, joining us in our free 3-day live training. You don't want to miss it. It's called the Real Estate Domination Event, and you guys can get a free ticket. Free ticket. Yes, you don't have to pay for anything. It's a virtual event. You can watch it at the comfort of your home. You guys can get that ticket down below in the video description. It should be down below in the link. Get your free ticket. And of course, you can upgrade to VIP if you want to have an exclusive and private Q&A session, of course, with us, Ty, Jerome, and the rest of the speakers that are joining us in this event. So go get your free ticket so that therefore, we won't have a show tomorrow, but join us at the live event because you don't want to miss that. Okay. All right. Let's go ahead and do some conversations real quick. Okay. So Glenn is hold on. Let's address Ann. And buying directly from a seller seems so hard. I can't imagine how I would start the conversation. I don't think most people selling even know you can do that and save taxes. So Ann, I don't know if you grabbed our book yet, but let me turn to that page where we literally give you a script on what to say, what questions to ask. We've gotten to a point where we can kind of predict as to what the sellers will say based on the questions that we ask. So I think it's on page, there it is. So I don't know if you guys can see this. Let me try to angle this in the right way. Okay. You see this table, this chart right here? You guys can all see that? That right there is our negotiation flow chart, and we show exactly how to negotiate. We in fact show you what to draw on as far as your visual aid for your sellers. We also ask questions like, let's see. So there's literally a script right here in the next page. It says, we're asking, hey, these are the benefits of seller financing. The script that you would use is obviously, I don't want a decision today, but here's what I encourage you to do. Talk first with your CPA or tax professional and see if the second option is something that benefits you, right? And then it also goes on to say, if you like, we can do a conference call with my attorney who is very familiar with this concept, myself, you, or your tax professional, and even invite your attorney if you like. So there you have it, folks. We got scripts, we got flow charts. We show exactly what to say when it comes to having a direct negotiation process for the seller financing. Daniel does a pretty good job kind of painting out the scenario. Free book, folks. Free books. Okay, this is the only time when the Kwak Brothers are socialists. When we give out free books, all you have to do is pay for shipping. That's all you got to do. We typically ship within 7 to 10 business days. With holiday coming around the corner, maybe a little bit slower because I think we use DHL. I'm not 100% sure, but get your free copy today, guys. We show exactly the script, everything we have, and of course, if you're all gung-ho, if you're like, Sam, forget the book. How can I talk to you guys? How can I work directly with you guys and get your mentoring coaching? Well, we do have a coaching program. If you guys want to get involved in that, if you want our direct one-on-one personal help in getting started in real estate investing or buying real estate the way that we've been buying, then of course that link is down below as well in the description. It's thekwakbrothers.com/coaching. thekwakbrothers.com/coaching. Get some more information if you guys would like some coaching from us directly. And of course, I had to throw that shameless plug in there. But with that being said, free book at minimum. Just check it out. Try us out. We've put in 292 pages worth of content. So there we go. That's all you guys for free. Alrighty. Okay, so Glenn is saying, as entrepreneurs, we are in the people helping people business. Every day, life happens. People get displaced, divorce, death, health issues. We provide a solution to their challenging situation, and that's exactly right. That's exactly right. And I believe free market entrepreneurship, true capitalism, not crony capitalism. I believe that is the answer to everyone's life's problem. And I say this, and I'm a firm believer of that, not because I've heard it from other people or not from theoretical studies, but I'm a testament to that, right? My brother and I first came to this country as immigrants. We didn't have anything. We were flat on broke. We were actually worse than broke because we didn't speak the language. We didn't know the culture. We didn't have anyone that we knew in this country. And yet, thank God with his blessings and of course, with the wisdom and knowledge throughout the years, we were able to achieve what I would like to call the start of American dream. So I do believe that capitalism, entrepreneurship, free market is the answer to poverty. I believe that if we can equip our young generation, I believe if we can equip them with that mindset and paired with practical skills, then I believe that our country will be very thriving. And I would like this model to be also to be copied by some of the third world countries, countries in Africa or perhaps in South America. There are a lot of countries that are struggling that we know. I would love for them to also take up on the same philosophy where entrepreneurship, free market, arming them with knowledge and business and entrepreneurship so that as a world, we could create solutions and we can increase the quality of life. That is the goal, right? Good example is North Korea and South Korea. I mean, you look at the massive division in terms of quality of life. I mean, it's massive, right? In North Korea, the government, centralized government, right? They control the means of production as well as, the quality of life versus South Korea, where they did take the approach of capitalism, free market. And I mean, just compare the two, right? Out of South Korea, we got Samsung, LG, Hyundai, all these worldwide brands that are recognizable. Out of North Korea, I don't know, we get death threats all the time and, people dying and threats of nukes. So we've been getting nothing but death from North Korea, which is not good. But just that comparison, guys, gives you a window and an outlook as to how I think about solving some of the most challenging life situation. And if we're going to bring this home, even in the urban areas where they're struggling, there's poverty, there's issues that obviously seems unfathomable to solve. I truly think that capitalism and entrepreneurship is the way to go. Because with capitalism and entrepreneurship comes the concept and the theory that you can do whatever you want to do. You can create ideas, you can bring ideas to the marketplace, and you too can also reap benefit from that. There's no such invisible hand, right, that stops you or oppresses you from doing that. I'm a testament to that. There isn't some mystery force, satanic, energy that stops you from going out, creating ideas and making money, right? And I think the terrible things that we've done to our young generation is tell them that they can't. Tell them that it's impossible. Tell them that's hard. Tell them that the market is too competitive. Telling them that, if there's no handouts or if there's no freebies, then they can't survive, which is insanely disempowering, very bad for our young adults and young generation. Very, very, very disempowering, right? So compare that to obviously the message of, yes, you can do it. You can grow. You can do whatever you want. You can start your own company. You can start your own business. Yes, success belongs to anyone as long as they create value, not because of obviously, privilege or whatever, right? It just drives me nuts. But that's just what I believe in. And I think that's the ultimate solution. And yeah, I ranted there for a little bit, but I truly believe that is the way that we can help our communities. That is the way we can go ahead and bring people out of their situation. Is there need to be a minimal help from the government? Sure. But I think vast majority of what I believe is we got to instill that belief in everyone that they can succeed, coupled with skills, mindset, and of course, being able to believe in that. So that's what I ultimately like to believe. All right, so let's go ahead and NNN says there's possibility of privatization of Fannie Mae and Freddie Mac. Geez, so many factors. I have to quit my full-time job to do real estate. Yeah, I mean, I don't imagine Fannie Mae, Freddie Mac going public anytime soon or private anytime soon, maybe because government, we all know government likes control. And unfortunately, that's the way it is. What's your prediction on interest rates? You're telling us wait to buy, but are we risking interest rates shooting through the roof if we do wait? I think the interest rates will remain steady for the next 2 years. Even Jerome Powell, the chairman of Federal Reserve, came out and said that the rates will remain steady. Although we are expecting to hear from them today, I believe. I think we're supposed to hear from what the Federal Reserve has to say today. But I don't think the rates are going to change for the next 2 years, just judging by where the economy is going. Okay. All righty. Okay. So I think that's pretty much it, guys. As far as Matt Smith says, I have best results without a script. Usually have a conversation, find out why, how much, and when they would like to sell, bill report between. Yeah, I mean, some people come natural when it comes to, this is all sales, right? It's just persuasion. It's just comes to how well you have a conversation. But our book gives you that framework as to how to have that conversation from to begin with. Okay. Alrighty, guys. With that being said, I'm gonna wrap up the show. We will come back next Monday, and of course, Daniel will join us. Daniel is fully recovered. I had a phone conversation with him yesterday. He is feeling way better. So we will have him join us back next Monday. We'll have a very interesting conversation. And of course, by next Monday, maybe we will know who the president is. Maybe, unless by now they've called any of the elections. But maybe we'll know by next week that either Joe Biden or Donald Trump is president, and we'll have a conversation then. But until then, join us tomorrow at our 3-day real estate event, absolutely free. You don't have to pay for any ticket. You don't have to pay for anything. Of course, if you want to upgrade, then there's a cost to that. But join us for free. Expecting you guys to be there, and I'll see you guys tomorrow at our real estate event. Take care, guys.